Now, since the Russia-Ukraine war broke out, oil went from about 90 a barrel on the U.S. benchmark, West Texas, to about 130. And as we sit here today, it's pared back. But you own a handful of pipelines. You own a tiny bit of Kelt, I believe, still sort of a legacy position. Are you rethinking your strategy when it comes to oil? Because I know in the past you've said we don't own it. We've run into trouble before, and it's just too cyclical for us.
Yeah. First, I understand the oil and gas business pretty well. I've sat on the boards of oil and gas companies. It's a tough business. The thing you sell is hard to get out of the ground. And when you get out of the ground is very important because the price is given to you by the market. You can't control the price. You don't need to own everything that goes up. You just need to own things that go up at a satisfactory rate. So that we missed some 300% rally in oil and gas stocks is neither here nor there. I could have bought a barrel of oil for $30 and been up 300% and not done any fundamental research whatsoever. So I don't get carried away, or I didn't buy Bitcoin at 2 cents either, and it hasn't hurt our clients. You don't need to own everything that goes up. You don't need to be a hammer looking for nails. And we're not an oil and gas specialist. Being an oil and gas specialist is very rewarding when oil goes up. But being an oil and gas specialist for the last 6 years, you saw your assets go from $800 million to 10 million, and you were thought of as being a bit of a joke. And then all of a sudden oil goes up and you're a hero. That's a tough career. And I just don't want to do it. And I don't think our clients want us to do that.
How much of a premium do you think is built into oil right now? It's hard to know, but do you see oil being higher and elevated for longer? Or if we do see some development in the war, some headline that makes us think, oh, okay, it looks like it may be over, that the premium comes out in a heartbeat?
You won't see all the premium come out right away. I'm on record for saying, and I was wrong for many years, that you can't have oil trade below $80 a barrel. And as I think Keynes said, you can be right but wrong for a long time. And the last 5 or 6 years has proven that you can make anything, particularly oil, trade below its marginal cost for extended periods of time, because you've got a bunch of actors all around the world operating for their own self-interest and not necessarily rational as a whole. And so I think that oil needs to trade around $80 a barrel to be profitable. And I think the average oil and gas company needs $80 a barrel just to be a moderately attractive long-term investment.
You don't own gold, you don't own gold stocks. We've talked about this before. And I'm wondering, because gold seems to be doing its job with this major earth-shaking geopolitical event with Russia-Ukraine. So are you reevaluating at all? Do you kind of look at a gold well over 2,000 and think, oh, maybe I should dabble in something, or no?
No, we don't dabble. Gold's been trading between $1,800 and $2,000 an ounce, or let's say $1,400 to $2,000 an ounce for the last, I don't know how many tens of years. All of a sudden it goes up by 8%. When everything goes down by 8%, doesn't make me feel envious that I don't own gold. You could have 10% of your portfolio sitting in gold for the last 10 years and you've made nothing. And all of a sudden it goes up 8%. Who cares? As I said before, you just don't need to own everything, and you can't possibly be right all the time. And even if you had 10% of your portfolio in gold, you're still down 8% on everything else. So it's a portfolio approach, and we just focus on owning the best companies in the world.
What about across the commodity spectrum? We've seen nickel just skyrocket in an unprecedented way. The London Metal Exchange shut trading for a while. Wheat has been soaring for obvious reasons. Are you looking at any kind of exposure there, looking at a nutrient maybe, or again, are those one-offs and it's okay for you to miss those?
Yeah, I think we're more concerned about how long those dislocations take place. Are we not going to be able to plant crops in Ukraine this spring? We don't know that yet. Everything else, right now, what you're seeing with grain prices is a concern about there being no grain grown in Russia and Ukraine this spring. We don't know that yet. So that's all speculation. And so we're more focused on if that occurs, what's likely to happen. Well, we're going to see food prices rise substantially. That's going to affect meat prices. Grains go into the feeding of cattle, for example. Bread, it works its way through the whole system. So that's a real inflationary problem. And if rates go from 2% to 8%, let's just say, to make it extreme, it's not going to matter whether you own gold, a grain operator, or a biotechnology company that, maybe if it discovers the cure for cancer, it'll go up. But if rates go up substantially, all stocks are going to go down. It doesn't matter what they are. So I just don't think, once again, you don't need to react to the news and go and run around looking for something to put your money into. It's already happened, probably.